Hi, and welcome to Business 101 with Mareevuitton. I'm Marie, and I'm excited to have you join me. Whether you're just starting out or looking to sharpen your skills, this series is designed to equip you with the essential knowledge and tools you need to thrive, from basic terminology to starting your business covered. This playlist is comprised of my responses to the questions that came in when I posed the following. Give me 1 to 2 questions about business or tax that you wish you knew more about. Okay, so I thought about how to talk about this and to be choosy with how I word this for obvious reasons. But anyway, the average business owner gets audited between 1 and 3%. Okay, 1 to 3% of business tax returns get audited. Corporations and businesses making more than 100,000 being most likely to get audited per the Hartford. Okay, that's their statistics. But for me, the 6 most common audit triggers are misreporting income, whether intentional or not. If it is intentional, it's fraud. So there's that. Disproportionate deductions to income doesn't mean it's wrong, but it does create an audit trigger. That's why I always say it's not exactly what happened, it's what you can prove. So know that if you are very disproportionate in what you're claiming, that is a red flag. And it doesn't mean that you can't do it. It means, if required, you're going to want to be able to explain that. Otherwise, you will be penalized. So there additional things that kind of bring up those audit triggers would be excessive expenses. Again, that's also disproportionate deductions. However, excessive expenses, that's usually a red flag even to me looking at it. Okay, because a lot of times a lot of things are not necessary for the operation of the business. Okay. And that's usually what I like to explain that as, okay? That it needs to make sense, okay? Especially in times where people are claiming cost of goods sold. Cost of goods sold triggers that there may be sales tax involved, okay? Or there should be, okay? Anytime I see that. So if you are a service-based business and you have cost of goods sold, that's probably not correct. There's a lot of different red flags for me. But large cash transactions, restaurant, hair, beauty, anything where you're dealing with large sums of cash, you better be able to substantiate where that came from and what's going on, okay, or what you're doing to get that amount of flow. Okay, it just needs to make sense. So recurring business losses, it's not uncommon to have a loss or 2 or more, but when it becomes consistent and that's the only thing that's happening, I mean, that's probably not a bit, you're either a really bad business owner or it's more of a hobby than anything else. Okay, so these are important things to consider. And misclassification of employees, and there are specifics on that, but I will leave that for another video. So it really is up to you to roll the dice, but you have to be able to explain and verify anything that you're presenting in those tax returns, regardless of who's preparing them. Okay, so if there's any questions to what I've just said, leave them in the comments below or email info@mareevuitton.com. Thanks.